Hey guys, Brandon Taylor with Capstone Realty. It's time for a monthly market update. We're going to dive into the statistics and look at what the market is doing in Huntsville, Alabama. Definitely a market shift, and so we've changed. I think the previous, 20 of these that I've done have all been that we're in a seller's market that's getting stronger. Well, I haven't done one in a few months, and that's not the case today. So stick around and find out what it means for buyers, sellers, and investors. So what we're going to cover, we're going to look at the supply, how it's been impacted, including how many homes are on the market and kind of the trends that we've seen with that, as well as any trends for the new listing rate and how many more homes are coming on the market each month. We're also going to examine demand, see how many closed homes we've had, how long those homes stayed on the market, mortgage rates, and what that might be doing to those numbers. And then we'll look at the balance between supply and demand, and that's called the absorption rate. And then we'll talk about what this means for buyers, sellers, and investors. Starting out, we're going to look at supply. So this chart that you're looking at now is the supply of homes for sale at the end of each month over the past 6 years almost. And so you can see that there was a significant downtick until basically beginning of 2021 when it kind of leveled out. We saw an increase last year, decrease last fall, but we've been near this bottom until there was a sharp turn in March of this year. So now we're sitting at 1,153 homes, which is up 88% over last year. It's a big increase. You can see this line. This spring and summer, there's been a big increase in the number of homes for sale in our market. It's still historically pretty low, right? We're back to basically pre-pandemic times is kind of where we are for the number of homes on the market. But and it's gone up quickly. So let's talk about why. So next chart is looking at the number of new listings per month. I think this is an interesting chart. We've looked back about 6 years of data, and so we're going to talk about what we see here. So right now we're sitting at, last month we had 939 new homes listed, which is down, it's basically flat, 0.8%. It's kind of in the noise, right? And so less than 10 homes. So pretty flat from last year. But I did want to point something out. If you look at where these green circles are, these are all of the months prior to this year that had over 900 homes listed. And there was only one back in 2016, one in 2020, 3 last year. And then this year, there's been 4 months in a row where we've had over 900 homes listed. So we've definitely seen an increase in listing activity. So those are the monthly numbers. Now we're going to look at a different chart, and this is a chart. Each data point is 12 months of data. So that is how many listings happened over the previous 12 months from each of these points. And it's showing what we're just saying is that over the past 6 years, we are at the highest point of number of listings in a 12-month period. So in the last 12 months, we've had 9,781 homes listed in Madison County, which is a 5% increase over last year. And you can see that we haven't been at that level in a long time. So I will notice that 8,000 at the bottom here, that doesn't go down to 0. So we're looking between 8 and 10,000 here. And we were between 9,000, under 9,000 until basically the pandemic started. And then since then we've been on this kind of tear to get up to almost 10,000 in a year. So we're up on number of listings. I do think it's interesting to look at where those listings are coming from. So what this chart does is breaks down by construction type. So we can see if you look at that line we just saw is this green line, same line. It's just we were looking at it just from 8 to 10,000, and now we're looking at it all the way down to 0. And then we break it down by new construction down on the bottom here and existing homes in the middle. And you'll see existing homes has been pretty steady. There's been a little bit of an increase here at the end. There was a weird thing in the middle here where it went down and came back up. But really, in the scheme of things, we're seeing less than 10% variation over a 6-year period. So that's not very much. I think we're seeing a much bigger increase in the new home space, where we're seeing a pretty steady, since about the beginning of 2019, we've seen a pretty steady increase in the number of new home listings. And that really accounts for the bulk of our growth in new home listings. All right, so that winds up our talk about supply. I think in total, kind of in summary of supply, is that we're seeing an increase in the supply of homes in our area. All right, next we're talking about demand. So demand is a little bit easier to measure. I mean, it's a little bit harder to measure, I'm sorry. It's harder to measure than supply because it's hard to say how many homes we would sell if there was more supply, but we're gonna look at some proxies for it. And so the first one is closed homes. So we're looking back at last month's, how many houses did we sell? We sold 765, which is down 12% from last year. So a little bit of decreased demand there by that metric. All right, next we're looking at, what is this? 3 months of activity. So this smooths it out a little bit, looks at it a little more seasonally. And so it's hard because this number is noisy enough that it's easy to tell that this month versus last year is different, but we wanted to look at it with a little bit of a smoother line. So this kind of looks at a quarter. And we see that there's definitely a change in this shape back in maybe April timeframe. And then we can see that there was it stopped doing this kind of sine wave and flattened out quicker than we would expect. And so spoiler alert, we'll talk about interest rates in a minute, and that definitely is coincidental timing, I think. I don't think it's a coincidence. All right, and so then here is the number of closed sales over a 12-month period. So we can see a little bit more of, hey, this is how many we sold over the last year. And then we are still up 1.2% over a full year period, but we are down both in a 3-month period and in a 1-month period. And so I think that goes to show that it's a recent phenomenon just in these last few months. It hasn't been, so I think it's just about 4 months back now that we're looking at this decrease starting to form a trend. All right. Days on market is another good metric for the demand because we can tell how many buyers are out there based on how long a house stays on the market. So we're looking at the average days on market. And so we are at 8, which is down from last year, 11.1%. So even though we see an increase in supply, and even though the closed sales do show a decrease in demand, that decrease in demand has not reached the point yet where it's increased our average time on market. They're still moving quickly. All right, so I think the interest rate discussion is definitely impacting all markets. I mean, monetary policy, its job is to impact markets, right? And so the availability of money obviously changed pretty dramatically at the beginning of this year. From, I think, December, we were at 3.1%. Yeah, 3.1% in December of 21, and it has gone all the way up to almost 6%. A couple of months ago. And now we're back. It's moderated some. Last week, I think we were at 4.99. Now we're up to 5.22. You expect some volatility in those numbers. There's definitely some uncertainty in the market. The Fed has said that they're going to increase interest rates until it slows down inflation. And so that is their goal. And that includes the price of housing. And so it has to slow down the pricing nationally. And so that's their goal. So that is definitely something that is occurring in our market, that it is slowing down demand. And so that's what we're seeing. So what? So let's get to the so what. First off, the so what, we talk about kind of that balance. How are they balanced? And we see that the months of supply is how we measure absorption rate. Is like how many months would it take us to have all of the inventory sold off, and it's gone up significantly. It was at all-time lows a year ago this time, around this time frame, I think. Pretty close to it. And so now we're sitting at a significantly higher at 1.7 months of inventory versus 0.7 or 0.8 or whatever it was, 0.7 I guess. And so that's an increase for sure, but it's still a strong seller's market. So a seller's market is considered anything under 5 or 6 months depending on who you listen to, but we're still well under that. But obviously that direction says it's not strengthening seller's market, it's a decreasing seller's market. But that seller's market is reflected in our average price point. We have seen prices continue to increase. I think it's 10% this year, 10% in the calendar year, 16% year over year that we've seen the price increase. So it's still steadily increasing. Our average price point countywide is up to $384, so almost $400,000 for an average price point now. And we're still seeing that seller's market in that the average home is still selling for over list price by about 1%. So it's not as high as it was. Obviously, last year it was up to 103%. Earlier this year it was around 102 and change. And so yeah, so we've seen higher points, and it is coming down, but it still is over list price. What's the story? So buyers, you can't expect some decreased competition. We're seeing we're still seeing multiple offers, but instead of seeing multiple offers with 10 or 12, you're seeing 2 or 3. And so because of that, you're seeing increased incentives and concessions, things like offers with closing costs being asked for being accepted. When it gets time to request for repairs, some of those things are being done. And builders, if you're looking at new construction, they're starting to have some inventory and they want to sell it. And so they're starting to incentivize by doing things that are, they'll buy down your rate. They have some introductory rate things where you can have a lower rate for the first couple of years. They may pay some of your closing costs, and all those things I think are worth considering for most buyers. That they can really, and so those incentives are attractive. Obviously, you have to pay a higher interest rate to get there, but if you need a home, it's a good time to do it. But I also think we shouldn't get crazy about it, buyers. There's still things are selling at or around list price. You're not seeing a lot of deals on the market. Maybe we're getting close to that point, but we're not there yet, where things are still moving quickly and for top dollar. And lastly, for buyers, I've heard this phrase that I like to use. It's date the rate, marry the house. Hopefully, if most of us see interest rates coming down at some point, it varies depending on which economist you talk to. Some say maybe first quarter of 23 we'll see it come down. Some say 24. I'm not an economist. I don't pretend to be. But for whatever it is, if rates did come down, you'd always have the option to refinance the rate. But if you need the house now is the time to marry the house, so to speak. And so if it's the right time for your family to purchase a house, you can always decide to change the interest rate down the road. Now, of course, there are costs associated with refinancing, so that's something you'll have to weigh on if it makes sense for your financial situation. But we can always talk about that. All right, so that's kind of for buyers. Yeah, so overall, I think it's important to not overplay your hand, buyers. Things are shifting, but it's not that much. We can't go crazy and think that we can just ask for the world and that sellers will have to give it to you, because sellers we still are supply constrained. There still is not much inventory out there. All right, sellers. You can expect more houses to be listed similar to yours, so more competition in that, where you're competing for buyers, where they may have actual choices. So that's something to think about when you're looking at offers and how you're treating and running the sale. And so things like focusing on the condition of the home. We really want to shine it up, have it staged, anything that's broken you want to have fixed, those kind of things. And then, for the last couple of years almost, we've been able to just throw a price out there and you'll probably get it bid up over what you think it was worth. Whereas now I think you need to sharpen your pencil a little bit and list the price based on sold comparables, because we're going to be selling closer to those list prices. And so you want it to be right. And you should expect fewer offers. If your house is priced right and in good shape, I still think it's selling very quickly, but I think the days of 15 offers for a house are likely at least fewer. Now, there could still be one out there. There have been some recently that I've been a part of. Most of those have been at very low price points. If you're talking about under $200,000, something like that, for a house, you see a lot more competition, but that is my experience so far, at least. And sellers, you do still have leverage. This is still a seller's market. You definitely can still push your price point and probably get a good deal like you want. If you need to keep the house for a few months or ask for some things like that, some concessions from the buyer, it's probably still a good time to do that. But just don't overplay it, right? Don't push so hard and think that it's not last year where really there was even half as much inventory and the same number of buyers. So you may, and also be ready that there may be a request for repairs where you actually do need to make some repairs or cover some closing costs or something like that, and your best deal may include those things. So I think my theme for sellers is know where you stand, know what the competition is around you, like the other homes, and then don't you don't want to scare people away. You do want to sell your house. You want to treat people well. And I think investors, I do think it is harder for properties to cash flow in our interest environment. Investor rates are even higher than kind of those home rates, and so it does make it harder. I do think prices are expected to continue to increase in Huntsville. I think depending on who you ask, I think Zillow says still 10 to 11%. I've heard a lot of people using 7%. I don't know, but So I think prices are expected to continue. The average rent went up significantly. If you look at July rent through the MLS, so that's not everybody, but it went up 140, what is that? Almost $200 in rent increase average across the board. You can't expect lower competition with rent and prices going up. It does seem like it's still a good time to buy, but I do think with the higher interest price, it may be harder to find cash flowing properties. So we do anticipate in the out years that appreciation rates will go down. Last year was 16% or something like that. I don't think you can expect that every year, but we still do expect it. And I do think there's a risk in the market. I didn't really talk about it here too much. Oh yeah, I do. Yes, and so also you're also seeing some opportunities out there, right? So the opportunities are that some well-qualified tenants may still not quite have enough money to buy a house yet, so they may stay tenants longer. So you can still get some good tenants out there. We still have very low unemployment, and our population is increasing. So there's still an increased demand for housing. I think there's a risk that, and I haven't seen a quantifiable way, so it's something I need to look into, but there are a lot of apartments entering our market. So it does seem like if you want to own residential real estate, you're going to have to compete with a lot of apartment owners for those tenants. And so that's something to think about and make sure you're aware of. So that is my snapshot of the market. That's what's been going on. If you have any questions, give me a call, 256-617-3975. I'd love to talk to you about what I see and what is going on. Thanks, guys. Have a great one.